second segment, which is the discussion segment on the show right now. We are reviewing global economic outlook for 2025. From now till December, how will the global economic look like? And I earlier said the beginning of the year 2025, from January to the half of it, we have seen a global economy that revolves around threat, uncertainty, and volatility. But what will this be as impact on the second half of the year? Joining me right now is Lawrence Taylor, a financial analyst based in Texas, US, who will be helping us to extract some of this issue going forward. Very good day to you, Mr. Taylor.
Hello, good morning, sir. How are you?
Very fine. So let's get down to the discussion segment of the show regarding the outlook, mid-year outlook for year 2025. But let me first ask, how have you perceived the first half of the year, from January to when we ended in June, and now we are crossing over to the second part of the year? What has been the first part of the year in terms of the outlook and the perspective going forward for you?
Okay, from the point of view of the work that I do in the financial sector, it's been chaotic. Wall Street, recently is finally trying to settle, trying to rise. But because of the new presidency, again, I want to preface it like I've always told in the interviews. I'm not a political commentator, and my commentary is not to reflect anything political. But from an economic point of view, the way the new administration, let me speak it in that terms, started out was very chaotic, especially starting off with the tariffs. So it made the markets unstable. It made the economy in general unstable. And of course, United States does not exist economically in isolation. So other countries are going to react one way or the other. And so because of that, I think things are finally stabilizing. And so the first half of the year has been kind of a roller coaster. So we look forward to the second half.
Now, talking about the roller coaster of the first half of the year from the economy perspective, a lot of analysts across the world have accused the U.S. government of its economic policy making, particularly from its fiscal policy aspect, as elevating the uncertainty across the world. What's your take on that?
As doing what again, please? I apologize.
I mean, the policy of the U.S. government elevated uncertainty, outlook for economies and market across the world, as they argue. What's your take on that?
That one is a tough question. Let me think about that. If perhaps you can ask me something else. Let me think, because I don't want to say what I don't know.
Exactly. But let me take it in a lighter mood. What the question is saying is this: you two alluded to that because of the fiscal policy, the tariff, and all that the U.S. government have been pushing out. It really created a chaos situation, and economies across the world are now saying that U.S. is capable of making the global economy so uncertain at this point in time that it has affected economies, it has affected global market to the point of, some people are saying, a point of no return.
Okay. Okay, great. Thanks for the clarification. The fact is that U.S. is the #1 economy. So if U.S. sneezes, the rest of the world is going to feel it. So I'm using that as a metaphor.
Exactly.
So if the U.S. sneezes, the world will feel it. Okay. It's going to impact the good thing is that now there are other stronger economies, unlike say 15 or a couple of decades ago when the US was the main thing. You now have China, you have the BRIC countries, for example. So there can be a little bit of more counterbalance. The problem is that once things start here, especially economically, it's going to spread to the rest of the world. Yes.
Very interesting. But let's look at one issue that many financial analysts like you have already pointed out: geopolitical risks, high debt level, and the vulnerability, the geopolitical tension across the world, particularly the Russia-Ukraine war, the Israel-Iran war, the Israel-Palestinian war, and other pockets of conflict here and there. What is the correlation between them and global market vulnerability?
Yeah, again, without commenting on the political aspect of it, The fact is that when there's any kind of conflict in any region of the world, it doesn't matter where, it's going to impact not only the economy of that particular the two countries involved, but in the region where there's such a war. Again, those of us who are Christians will hope that soon God will make His kingdom visible here on earth, so that there will be no more conflict, as the Lord's Prayer says. And so let us hope that man, being unable to rule himself, will be able to sometime have God's government here to do away with all those wars, and we won't have to worry about it no more.
I really love your submission in that regard, because that's the prayer of everyone across the world. At least let's have a reduction in tension. But for you as a financial analyst, let's take a look at some of the key issues in the global financial issues. Global commodity, stock, equity. What's your perception of their performance so far?
Surprisingly, the performance of the stocks and some of the sectors have been so strong in spite of political decisions that could have gone negatively. So the economy and the market particularly is self-sustaining, so to speak. So as it is, I'm not too worried about it, because one political system can no longer impact. Well, they'll still impact, because again, US being the largest economy, or China, for example. But as far as the performance, certain sectors are very self-sustaining. The tech industry, for example, tourism industry, for example, since the pandemic has recovered, and construction industry has recovered. And because of movement of people, there's going to be need for housing and office buildings and things. So there's ability, these sectors make it possible, in spite of the political chaos, for the market to survive. Again, the market is cyclical. Regardless of political chaos, there are going to be good years and there are going to be down years. And usually it's about 7 years. That cycle is usually 7 years, 7 to 10 years. So we are overdue for some kind of correction anywhere in the market. And then the political chaos makes it even more evident that it's going to happen. Yeah.
Very interesting. Now, Mr. Taylor, let me quickly ask you some practical question. You are living New York City now for Texas, but you are in New York. You are in New York for a particular conference about financial issues, particularly on the Broad Street, on Wall Street, and the rest of them. Can you give us?
Well, I didn't come specifically for the financial. I wasn't. No, it was a combination of family and religious arrangement that I came to New York for. So I knew I didn't give you the specific details as to why I was in New York.
Okay.
But so I wasn't on Wall Street specifically.
But no. even though you didn't enter those high towers of Nasdaq to go and check what is happening to the stock, but what is the feeling at the Wall Street concerning all the policy of Donald Trump, threat of tariff on traditional American trading partners?
Okay. Wall Street specifically, the commentary based on my contacts and the sources that I rely on for my work. Right now, the companies have set policies that will protect themselves regardless of who's sitting in the White House. The politicians are going to do what politicians are going to do. The technocrats in the financial sector are going to do what they're going to do. The difference is that some of the technocrats, they are going to, smooth up, so to speak, different political figures to frame favorable political policies. But overall, the technical people are doing their work, so we don't have to worry about that.
Now, talking about the technical people, but let's take a look at the technical policy coming out from the technical people. Investors are looking out for opportunity to navigate some of the global challenges that we have faced. What would be your advice to investors on how to navigate all the challenges that we have faced on global market as we speak right now?
That is a very good question, and I'm glad you asked that question. The advice is don't try to do it yourself. Get professional advice you need. Let somebody who works in the industry, who is reading the tea leaves, as it were, look, they first of all need to understand what your goals are, what your goals, what you're trying to accomplish, whether it's you have $1,000 or $1 million, it doesn't matter. Know what you're trying to accomplish with that money that you worked hard to earn. Secondly, be very plain and open as to your risk, how much risk you can take. For example, can you afford to lose 10% of the market of the money you put in the market? Can you afford to lose 20 or 30%? Because you may have 3 family members who have the same amount of money. The family member A may afford to lose only 10%, while family member B can afford to lose up to 20 or 30%. So each individual investor or client has to know what their risk assessment are, and the professional will not know unless you disclose what your goals are and what your ability to take risk are.
Now, Mr. Taylor, one key issues on global economy today, or the global market, remains the approach that U.S. government is using to conduct its trade and its international economic relation. We have seen the threat to China. We have also seen the response from China. But altogether, technocrats like you are there in the U.S. Does it mean that Donald Trump is not taking a hearing for most of you guys in the U.S.?
Well, at the risk of making a political commentary.
No. I just want to for you to look at the economic aspect of it, how some of these decisions have affected global market.
Yeah, well, that is part of why I said about a segment ago, is that technocrats are going to do what they're going to do. But the CEOs and the people who have to do government relations are going to navigate that part of this thing and do what they got to do. But the financial sector does not exist independent of the government, because government sets regulations and rules and policies that govern these things. And that's why in the US there are organizations called lobbies, usually a bunch of lawyers who are going to be like ombudsmen, who are going to go between the industry and government. Yeah.
Now let's take a reaction from Europe, for instance. The EU is already making preparation for a retaliation of some of the threats coming from US government. And I know definitely one of the things they intend to do is that they want to shift their trade to China and to some Asian countries. What effect will this have on US economy from your own perspective?
Well, remember that all those are independent countries. The US, and so they're going to have counteracting measures and policies of their own to meet up to whatever the US is. And some countries are more reliant on US than others are. For example, China is very independent to survive economically than, say, certain other countries that don't have the capacity to cope with the policies coming out of the US. So it depends on the country.
Very interesting. Let's now look at third world countries. Do you have something to say? Do you have something to say in that regard?
Sorry, I missed.
What I'm saying is that, do you still have something to say?
Can you
Are you there?
Regarding?
Yes,
yes, I'm here. Sorry.
Regarding the EU own position now, because EU, as we speak right now, is shifting their trade and economic relationship down to Asia, and they're looking for a new market. But we know that EU is a traditional trading partner with the US. You know, going with all this.
You mean the EU?
Yes,
European Union.
Yes, European Union.
Okay, thank you. Again, because I'm in a vehicle, it was a little noisy and I couldn't hear you at first.
All right.
Yes. Again, that's to demonstrate their independence. Like I mentioned a few minutes ago, it's regions of the world, even individual countries of the world, can be independent of what the US is doing. So they may look for new trading partners like the EU countries have done. Yes.
It's a good one. But on the part of developing countries like Nigeria, we have seen the threat, we have seen the response, we also seen the projection of what will happen to Nigerian economy, even in retaliation to what US is doing. But developing countries like Nigeria are like, where will they turn to with all these threats that is coming out from US government?
Very good question. Again, unlike China, a country like China or a region like the EU, countries, especially African countries like Nigeria, for example, we do have the resources, but if the political policies were there, we wouldn't rely on the US as much. And Nigeria itself wouldn't. So what Nigeria needs to do is its policymakers, its politicians, its technocrats needs to realize that there are resources that country has been blessed with, and therefore they should be able to manage it in a way or set policy in a way that even if they are still relying on the US for because of technical abilities and technologies they have to import from the United States, they should still be able to sustain themselves. And if the relationships should strain to the extent where they need some of those technology from other countries, be able to build alliances, especially economically, with other like Asian countries and European countries like the EU is doing.
Very interesting. Now let's get back to the technical aspect of this, because talking about the financial market and the rest.
Sure.
Now, one of the key things that we are looking at so that we can be able to get right the second quarter of the year is how to ensure that the market is robust, the market is building confidence in investors, and it's also ensuring profit and growth for investors. But from your own understanding, do you think we can be able to realize this in the second half of the year? I will give you one illustration. The IMF and World Bank have
again,
are you there?
Based on the based on the resources that I'm sorry.
Go ahead, sir. Go ahead.
Okay. Based on the resources that my company that I represent uses and the sources of information we have, there is going to be a downturn in the next 12 to 18 months. When that will start, I don't know. But because of the things that have happened at the beginning of the year, of course, it's like you choose to do something, there's going to be consequences. Sometimes the consequences are immediate. Sometimes it takes a while. So there are going to be consequences of what happened at the beginning of this year. And it's not going to be, again, it's going to probably be short, but it's like I mentioned before, it's a cyclical system. The financial sector is cyclical. There are going to be good days, there are going to be bad days. It's not linear. It doesn't always go up. So that we are prepared for a short recession of some kind. We don't know how long it will last. Hopefully it's just 1 quarter. It doesn't last until 2 quarters, so it becomes a depression.
Exactly. And talking about recession, it has been predicted that the inflation across our global inflation will still maintain its high position at 2.9 today, and it could get higher than that. But what is your concern about the global inflation as we speak right now?
Well, again, because it becomes global, it's going to take time to go back down. Rises, and it's also, and again, I'm not specifically an economist, but economic commentators tell you that when it goes up, it's going to come down. So I'll leave that to the technocrats in the economics we're reading from our perspective.
Now let's get down to the issue of revamping global economy and financial market. First, I want us to tailor this discussion down to Nigeria now. First and foremost, the government of Nigeria with budget.
Okay.
We are tailoring the discussion now to the government of Nigeria and the economy of Nigeria so that we can have a perspective for our viewers. Number one, the budget of 2025 is here, but it's not yet implemented. But what will you say about the crude oil price that is fluctuating at this point in time? Because that will also determine how much the federal government will raise in terms of revenue going forward. As we speak right now, crude oil is dropping. It's now $72. although projection for the budget is $75. So what is your advice to the government in terms of revenue for Nigeria?
Well, in terms of revenue for Nigeria, Nigeria needs to diversify its economy. It should not rely solely on oil. There's enough technical knowledge in the country. There's enough agricultural land where you can start making the agricultural sector work. The education sector can be robust. Let's see, construction is robust. The finance sector in Nigeria, as far as I know, based on my contacts, is robust. So Nigeria relying 90% on oil is a problem. They need to get to a point where they start to gradually reduce the reliance on oil. Because remember, there's a transition in the rest of the world to solar energy, for example, wind energy, for example. So you have to make adjustment as a country or policymaker to make sure that if oil costs, the country doesn't go to drain.
Now, let's also look at the private sector side of the economy. The private sector, as you said, I know most of the information you are getting is on the private sector, particularly on Nigerian stock market. Let me review this to you. For the past 18 days, the Nigerian stock market has been on a bullish outing with over 88.1 trillion market capitalization and over 33 trillion market value. What's your take on that?
It's a good thing. But like when I advise my clients, I tell my clients specifically, without disclosing specific clients, if you're chasing return, you're doing the wrong thing. Because those returns are not self-sustaining. Like I said, it's cyclical. You're going to have periods where those returns is bullish, and then you're going to have a bear market. So the advice would be usually moderate yourself. Don't say every time you're going to, maybe set a certain amount that you can invest, whether it's going up or it's going down. And then during the bad times, you're acquiring more assets, more stocks. When it's bullish, when the prices of stocks go up, you're going to get fewer stocks, but you still continue to invest. Overall, the aggregate, when you have a consistent investment process, the aggregate is that you have a better return for yourself as an investor.
Exactly. Now let's tailor this discussion down to ordinary Nigerians who will need financial literacy education. Can you take us through that your illustration that you gave the other time, the three buckets or the three? So take us through that.
Okay. And that's an illustration I use even in my work with my US clients. Let's assume I have a client who earns, let's just for ease of use, earns 100,000 a year, right? I will advise my client.
All right, we have a network freeze there.
Let's say you have money. How much is?
We have a network break or freeze with Mr. Lawrence, but I know he will be back to explain the
housing, food, entertainment, etc. So let's say 50% goes towards those fixed expenses. Have another 10-20% for miscellaneous, those things that are unexpected that may happen. You have a car breakdown, for example, and the bill is, instead of you weren't expecting, and this is like a one-time thing, you have a 10,000 expense that you didn't plan for. You already have that as miscellaneous. Then you should have a 30% of that income, or 30,000, where you're going to save, let's say, 10,000 or 15,000 of it, and then invest the balance, the other 20% or 20,000 or 15,000. So that is the one. And you can start smaller than that. It doesn't have to be those exact measures. You can start at 5% to invest, another 5% to save until you comfortably can increase. But in broad terms, that's kind of how to do it. And so you have what's called the expense, the living bucket. 50,000 is going towards your living expenses. Then you have the savings and investment bucket, which you're going to have for 30,000, for example. So you know how much of it you put in savings, which we call it emergency fund. Savings where you can easily reach in case of an emergency. And then you have a miscellaneous pocket, roughly 10% or so, or 20%, where if there's an unexpected event, you can quickly reach that large, say 10,000, for example, to take care of that expense. That's the advice I give to my U.S. clients. And I think if it works for U.S. clients, it should work for Nigerians.
Exactly. We hope that it will work for Nigerians going forward. Then for young Nigerians, majority of them are looking for jobs. Others are looking out for startup. What's your advice for them in the area of seeking for capital to start their businesses?
Okay. I'm not seeking capital. That is part of where the savings component comes in. Because if someone who wants to start a business, if they had to save, say 10% or 20% of their 100,000 they've been making, and now they want to start a business, if they have a history of say 2, 3, 4, 5 years of setting aside 10,000, that's a chunk. And they can then start a business. The one good thing that the U.S. does, which I mentioned previously a couple of months ago, that I don't think Nigeria does yet, and the government should probably look at, is support, have a way where the government has some kind of subsidy or reduced interest loan. In the U.S., it's called SBA, Small Business Administration loans, where to encourage business owners or business-minded individuals to start up businesses so they can employ Nigerians. So those are the things that you can do.
Exactly. Very interesting from you, at least giving us that perspective as we go forward on issue, particularly revamping global economy and financial market. Because tailoring this topic and some of these issues down means that we need to take care of our people, empower them on how to raise money for their businesses, and also encourage government on the way to be spending whatever money that's coming through the fiscal policy. But Mr. Taylor, before I let you go, I know you have a plane to catch right now. Specifically, the global financial indicators have also shown that we could, as you rightly pointed out, it's a cyclical area, both boom and bust. But what would be your projection for the second half of the year, from now to December? Your projection, what do you think will happen to the market? How do you think business will be responding to the market, and how profit will come to business people and investors across the world? What's the projection on that, sir?
I think it's going to be fairly stable, but the longer term, immediate term, say the next 90 days is fairly going to be stable. But thereafter, say 120 days to 6 months out, that's when we're going to begin to see some downturn, which will be as a consequence of what happened in the first 6-7 months of the year.
These are quite instructive projections coming from you. Mr. Taylor, I need to allow you to go and catch your flight. But thank you so much with all the inconvenience we have to put you at this point in time so that we can have you on the show. But
it's my pleasure. Anytime I can provide valuable information, I can educate the public, I can make it possible for somebody to benefit and help themselves. I'm glad to do it.
Exactly.
And thank you for the invitation. You're a gracious host.
Exactly. And I can assure you that many Nigerians who are watching, who have been following this program and watching you most time when you feature, are really benefiting from it. Particularly, the 3-box illustration is quite very interesting and instructive for business owners and our young ones. Thank you so much for coming on the show, sir.
Thank you, sir. May God bless you.
Amen. So we'll see you soon.
All right. See you next time. Please email me whenever you want to reschedule for the next time. So I'll make sure I don't put it on a travel date so that I'll be more stable.
All right. So we'll do that. Thank you so much, sir.
All right.